Okay, so we're going to talk about the importance of having mostly life insurance today, then we're going to talk about other types of insurance on Friday.
Yeah, so he talks about the 4 types of insurance, and we'll be talking about each of those insurance types. So tell me, what is insurance? So you pay a company to help you in a time of need. So you have a contract with an insurance company that in case some type of an event happens, that they'll reimburse you for those costs. So you change a fee, and that fee is called a premium, and that's in exchange for financial protection. And notice it has to be a covered event. So for example, if you have a 1-year life insurance, term life insurance policy, and 366 days later you pass away, is that a covered event? No, because it wasn't covered in the time of the contract. So they're very specific here. Key principles of insurance, again, very similar to what we've done before. But you need to understand, what are the key areas of insurance? What are the limitations? What are the costs? What are the benefits? Because insurance is not cheap, but it gives you peace of mind. And it helps in case of major events in your lives. Should you insure against everything? No. We'll talk today about this. We call it high cost, high severity losses. So things that would have a significant impact. A student came to us last semester and he said, you know, I had this car and I was paying on it. My buddy wanted to borrow it, so I let him borrow my car, and he got in a wreck. He says he totaled the car. What can I do? First of all, he didn't have liability insurance, but there was no coverage on the vehicle, so he basically had to still continue to pay the costs on the car, even though the car was totaled.
Yeah, so he still had payments that he was still paying on his car, but his car was worthless. And his friend, of course, didn't have money to pay for the damages, so he was out of a car that he was still paying on because he didn't have insurance.
And then work only with high-quality individuals and institutions. Okay. So what are we? Child of a king, seeking the Spirit's guidance, making wise choices in my use of insurance products to maximum protection and minimize costs. Again, what insurance does, it just gives you peace of mind. Then in case something happens, that those you love will be taken care of. I understand insurance basic and life insurance so I can get the protection I need at a cost that I can afford. And again, why all of this there is to accomplish the things that Heavenly Father wants us to accomplish. We're going to talk about the first 4 here. We'll talk about life, health, auto, and home. Today, we're going to be mainly spending time on insurance basics and life insurance. And then we'll do health, auto, and home. Homeowners/renters, we'll do that on Friday. But it's important that we understand. What you're doing is you're transferring some of the risk of certain types of losses from you to an insurance company. So for example, say your house burns down, that's a loss. But if you've got homeowners insurance, then that loss, you've transferred that risk to an insurance company. You're in a car, you get in a wreck, the car's totaled. Assuming you have full coverage insurance, you've transferred that loss to the insurance company. So that's what it is. So by transferring risk, it can help you achieve your goals. Should you have an accident, should you die, should you get sick, or become unable to work. So I like this thought here. How do you manage risk? So you can avoid it. You can take care of yourself. Sister Sudwicks and I at 6 o'clock this morning, we were out running on the bike path. As you get older, you have to manage your health really carefully. So avoid high-risk operations, eat well, exercise, don't go skydiving. We probably shouldn't go surfing at our age, too. You can reduce it. Every time you get in your car, if you put on your seatbelt, you're reducing it. I like all my vehicles have a fire extinguisher in it, too. First aid kit, things like that. You can assume it. We had our teenage car that the teenagers drove. It wasn't worth much, so we had liability insurance on it. And if anyone wrecked it, we would walk away from it. In fact, one daughter was driving really close to a U-Haul truck. And our vehicle had these running boards on the side. And the U-Haul truck, the lug nuts on the U-Haul trucks, you got a little bit too close, and those lug nuts made this really beautiful design on the side of the running boards, and so we just took both running boards off.
But we're talking about cars.
I know, but that's how you assume some of that. And then you can transfer it. That's what life insurance is. You're transferring the risk in case you die. That goes to the insurance company, and then they'll pay money back to your beneficiaries. So do you really need an extended warranty on a toaster? That's funny. We bought a $12 toaster from Walmart. And they says, well, would you like an extended warranty on that?
Like, no, we'll just buy another one.
And what you want to do is you want to insure against the critical, the very serious losses. And we like to think of two classifications of risk. Frequency, how often does the loss occur? And severity, how severe is the loss? And what are the ones you really should insure? High frequency, basically high severity losses. So I'm trying to think, do I have low frequency, high severity, death. You know, your house burns down, auto accident. When you have teenagers, the auto accident becomes a high frequency, high severity item. So just because we've had how many accidents with our kids?
A lot.
A lot. If it happens a lot, but it's not very severe, like you get a cold, again, you can assume it or you can reduce it. Or low frequency, low severity losses, a paper cut, you can reduce it and assume it. But again, it's the things that would make a difference on your financial life that you want to insure against. What's the easiest way to reduce insurance premiums?
Well, if you have a higher deductible, your premiums will go down. Mm-hmm. So on our home, which we've owned, a few homes, but we have a really high deductible. It's like $3,000. So in order for us to make a claim, it has to be more than $3,000 worth of damage because the insurance pays what's above the $3,000. You always pay the deductible first, and then they pay the rest. So we've never made a claim on our homeowner's policy, even though we've had peace of mind because we've had a homeowner's policy the whole time. But we have never had any damage that was more than $3,000. So we just would assume the damage. If there was any damage done to anything, we just do it ourselves. Unless it's over $3,000, but we've never had that happen. But so our premiums are lower. So we don't pay as much, but we pay it every month. But our premiums are lower because we have a high deductible.
So think about the deductible as what percent that you co-insure. Mm-hmm. So you and the insurance company together are insuring this together. Are there insurances you probably don't need?
Yeah, usually if you're renting a car, your car insurance that you already have will insure you against rental car collision protection. So you usually don't need rental car insurance if you have your own car insurance. So when you go to the airport and you're traveling, you need to rent a car. And usually you don't need flight accident insurance. Usually you don't need travel insurance. It says a lot of times your credit card will cover travel, but I don't know about international travel.
Yeah.
And then long-term care insurance.
It's just really, really expensive.
It's really expensive. And then credit card protection insurance or pet insurance.
Yeah. I'm amazed you can get insurance for your pets.
Some people like it.
What are the basic rules? Number one, assume those risks that you could cover from your emergency fund. So in our case, someone gets, our emergency fund was big enough when our kids got in wrecks. Again, the deductible could be covered from our emergency fund. So we can assume
Well, we also had our kids save the deductible before they could drive.
So in case
if they got in a wreck, then they had the money already to pay.
If not, then they had to earn the money to pay the deductible before they could drive again. Mm-hmm. Avoid those risks. The probability of occurrence is high but not severe. Don't go skydiving. Don't go deep sea diving. I don't know, things like that. But you want to transfer the catastrophic ones. Again, death, homeowners insurance, fire, auto insurance. And there's got to be a relationship between cost and benefit. So again, be wise in that side there. If you have higher deductibles, if you take more of the risk, your premiums are a lot less. Okay, so those are kind of the basics of insurance. So let's talk about life insurance. So someone tell me what life insurance is? Yeah, insurance in case you die. Does that mean you get to, if you die, you get to keep the money? No, it's really insurance for your beneficiaries. So when our kids were growing up, we had term life insurance. So in case something would happen to me, the money would go to Sister Sudwick's and the kids. Again, the nice thing about insurance proceeds is those are tax-free. So she wouldn't have to pay taxes on it. So life insurance is really just insurance compensation to your beneficiaries should you pass away. Again, low frequency, high severity risk. So if you have a dependence, you have a responsibility to have sufficient life insurance if it's available. Is life insurance available in most countries? A lot of countries it's not. So you really need, so in cases like that, what happens? Who takes over that responsibility? It's the family. It's the community. If you're single and no one depends on you, do you need life insurance? No. So probably for 50 or 60% of you here, life insurance is probably not a needed thing.
And even a lot of times when you're first married, you may not need life insurance. It might be included with your company that you're working for, but you may not need life insurance until you have sufficient, or if your wife doesn't have a job or something, then you want to take care of her in case you pass away.
Yeah. So the challenge is if you have kids, if you have people that are depending on you, life insurance is important.